Markets have been on fire this week following the Fed's commitment to take a patient approach toward raising rates. Is this a Santa Claus rally here, or is this more than a seasonal, jump?
Well, I believe in Santa Claus, so I think it is a Santa Claus rally in the sense, I think it's real. I think someone asked me if I should trust it, and I said yes, it has the full faith and credit of the Federal Reserve behind it, and the Fed is going to remain accommodative for a while. In one sense, I'm shocked but not surprised. I'm shocked the market reacted so strongly to it because it really shouldn't be a surprise. The Fed is trying to help the economy, and we stand between the Fed and the economy.
So, what are some of the other fundamentals you think are at play here in the market?
Well, a few things. First of all, I still think most investors are distrustful of the market. And I wouldn't say it's as keen as it was 2 or 3 years ago, but there's less to be scared of than there was 2 or 3 years ago. I still think people remember what happened to them in '08 and '09, and they still, deep in their heart of hearts, fear that. So you have that sentiment. The earnings are still quite good. The earnings are coming in quite well. We've had an upward bias in earnings over the last 2 or 3 years, and on forward earnings hasn't been that great in the last month or two, but I think that's probably oil and the dollar, and that's excusable. And then the valuation, I don't know where the market should be valued, but I'll tell you, right now it's in the middle of its last 20 years band. So that's sort of, you can't say it's high or low, it's in the middle.
Right, so you're not saying it's overvalued or
it's
not?
It's not a factor. I mean, and valuation seldom is a factor. Only when it's really, really extreme does it make a difference, and we are quite clearly in the middle of the band.
So on Thursday, the Dow gained over 420 points.
Yeah.
I think it was the biggest gain since November 2011 or something like that. And now we're kind of within striking distance of the 18,000 mark. Do you think we might hit that before the end of the year?
Oh, sure, but marks like that are sort of like turning 40. You're not really that different than you were the day before, but you need a marker. I think you could hit it. I still think the market's up about 7% last year. I was surprised. I mean, you could have knocked me over with a feather, as they say, yesterday, because quite honestly what happened was the market went up at a period of time when I thought we were due for a little bit of a pullback. But the whole point is, if it pulls back, and it will, there's still buying opportunities as long as the Fed desires to help the economy.
And how much of a pullback are you talking?
I thought it might be 5 or 10%, maybe a little bit more, and it still may happen. But those sort of things, I think that's a fool's game. How many 5 to 10%, 5 to 8% corrections have we had in the last 2 or 3 years? And if you call them, what good did that do you? You are much better off buying into the market on that weakness, looking for opportunities, even buying on strength. That's the big call. I'll never get the teeny tiny ones. I've learned that over the years. Or if I do, it's sheer luck. Try and get the big call.